What's going on, YouTube? It's your boy Jeremy Frazier, aka that financial guy. Sorry about the lighting here. I'm not at my normal spot. I'm still out here in Florida, enjoying this nice weather. But I want to get an opportunity to talk to you guys about diversification and what it means to me. Recently, I've heard some discussions on the internet about whether diversification is an intelligent thing to do or not. And I quote what I heard was essentially diversification is for idiots. Um, and it made me want to understand why do I diversify and why is it beneficial to me but maybe not to someone else. So the simplest way I can think of diversification to describe it is essentially it's allocating your money among several different assets, whether it's stocks, real estate, agriculture, whether it's in your stock portfolio specifically, and you have some mutual funds, ETFs, um, finance realm, uh, tech realm, food industry. Essentially, you just want to make sure your money is spread across the board. And the positive thing about diversification is when the market is going up and down and all around, for instance, let's say the real estate market is down, then maybe stocks and bonds are up. Let's say stocks and bonds are down. Maybe Bitcoin and gold and silver is up. So it kind of protects your money so you're not taking a hit altogether. Because if you just invest in the tech industry and then the tech market is down for a day, you're going to get hit especially hard. So so why would someone say diversification is silly? Well, let's look at it this way. If you're an intelligent investor, if you're a business insider and you have intel and the skill set to understand how to value a company, you essentially know putting your money in this bucket is going to give you a great return. And the more ownership and power you have in that one bucket, the more money you can get in return from it. So that's why if you're someone like a Warren Buffett, for instance, you understand how to value a company and know its worth. You can go in there, see what this company's doing, and say, "Hey, they're going to test time," and you can put $100 million into it, something astronomical, knowing that it's going to return you billions at some point. But for most of us, we don't have that knowledge. It would take a long time to figure out, and it'll be very risky in doing so. So I don't really suggest, intermediate and beginner investors, to not diversify. I think that will set you up for failure, and you'll put yourself in a very tough situation. Also, speaking of diversification, I think it's important to diverse where your money is at. If everybody knows with this GameStop situation, Robinhood did not have the ability to keep up with the demand of the share purchases, and they didn't have the ability to be able to keep up with the selling once that demand for the purchases is ready to cash out. So if 100,000 people got $3 billion worth of GameStop and then everybody decided to sell at the same time, Robinhood did not have the money to cover that on top of any other investments people are selling on that platform. So that's why it's important to kind of understand, you want to get different brokerages to deal with when you're working with your money. Some brokerages you'll deal with small kind of investments, other brokerages you'll deal with bigger type of investments. So diversification works with the trading platforms you use as well. Just to be clear, I am not a financial advisor. I can't tell you to diversify or not to diversify. I'm just a person that's a student of the game, in the financial literacy game, and I just want to share my opinion on what I think is a smart move to go. With diversification, it typically is something that, someone who's already built wealth would do because it can help, secure their money and make sure they don't have so much volatility with their portfolio. If you're a risk-seeking person, hey man, if you find a piece of gold, go all in. And when you do, hopefully you get rewarded. But if you don't, just understand you're going to take that hit. Not diversifying is not for the faint of heart. You can't be a very emotional person because there's going to be days where your money is getting lost by 10% of the value. And you're talking about hundreds of thousands or even millions of dollars. You're losing a lot of money when you see 10% drop. So If you're not going to diversify, just understand the market's going to go up and it's going to go down. So you have to make sure you're patient. You got to understand your trading strategy and your stock strategy and your investment strategy, and understand trends that are going on in the market to know that if you lose 10%, that may just be temporary. And you know it's going to go back up because it's happened before based off of the long year trend that you're looking at. But like I said, I diversify. I'm not going to call you an idiot for doing it. But I do understand why people that have superior insider knowledge would not necessarily need to diversify. But I hope you guys like this kind of information. If this is something you want to hear more about, please make sure you like, comment, and subscribe, and let me know, and I can give you some more details. I appreciate you guys. Until next time.
Put that work in. 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 They got to catch up, cause I'm too fast like Usain. Don't put me in no one-on-one, get cooked up. Well done. Came up out that low pond, but now I'm swimming with